Let's take it over to Alan Knuckman, the Chief Market Strategist at Paradigm, for some Trader Talk. Hello to you, Alan.
So what we've seen here is a November burst to leading now to the January effect. So that sets up for a strong year if history holds.
How are your trades doing?
Speaking of hold strong. Long has been right. So what we're looking for is our in-the-money options to get further in the money. And the next catalyst could be the down dollar. That will help out all assets.
What's your new trade of the day?
All right, today's trade trigger, Freeport-McMoRan. Obviously very sensitive to the dollar. It's a mining stock. It used to be Freeport-McMoRan and gold. So gold had a nice little burst here as well. So it's the copper stock. It's trading around 40 right now. It's got a triple bottom at 34. It is 10% off the February last year top. So it's had a bit of a pullback. We've been trading between 34 and 44 for mostly for this year. Now we popped above the mid point of this range. So that's to send us back to the range top once again. We've also held the 200-day moving average. So a lot of strong signs here, and a breakout of this overall range sends us to 54. Let's remember this stock was at 60 in 2011.
Dr. Copper is known as a tell-all of what's happening with the economy. What's your tell-all on your copper stock trading strategy?
All right, I'm seeing what I want on the charts. We've got a lot of leverage, long accumulation. The smart money is building positions in this. And I also saw bullish divergence. When it made new lows in November, it did not make new highs in implied volatility. So the way to play here is with an April option, an April 35 call. Again, that triple bottom's at 34. The April 35 call is trading for about 6, with the stock at 4 right now. So it's got a delta of 80, and it's got 3 months of time. So the expiration break even on this is about $1 up above.
What are your trading day takeaways now that the Fed has spoken?
All right, trading takeaway. Takeaway number 1, for fall. Again, we keep talking about this 4% pivot in the 10-year note yield. Very important. We dove below that here yesterday, breaking below 4% with a big dive here ahead of that Fed announcement. Now, it looks like the Fed's going to be on pause a little bit more than we had thought. We'll have to see. But we want to follow the 10-year note yield, which is based upon supply and demand, not Fed policy. But a push below that 375 low sends us back down to 325. That'd be 3.25. That's where this market broke out originally, and that would be very, very positive for stocks. Number 2, 2020 tech. All right, it wasn't so long ago that everybody was very, very disappointed in technology. So old has become new again. Microsoft and Google both announced their earnings this week, and they both had net income, meaning pure profit of $20 billion each for the quarter. So they've reinvented themselves. Number 3, 75 away. The S&P got up to 49.25 on Tuesday, which was just 75 points away from S&P 5,000 we've talked about. We've seen a rally run from 4,100 at the end of October, beginning of November, to nearly 5,000 in 3 short months. So that momentum of 22% up is up, up, and away.
Thank you as always, Alan.
Thank you.
Go to businessfirstam.com for where to see our show on TV.